With our stock of the day, it is Fiducian, FID, the financial group offering funds management, financial planning, platform and administration. And in fact, it's released its quarterly cash flow report this morning. Net inflows into the platform for the quarter, 122 million, and year to date is $279 million. And Claude, just taking a look, the share price over the past year down around 25%. In fact, it peaked late 2021, has been under pressure ever since then. What are you seeing with Fiducian at the moment?
Well, we're seeing in that downtrend, it acting like most fund managers, to be quite honest, because obviously as the market came off the boil towards the end of 2021 and in the beginning of 2022, which is now their comparable, right? That has hurt their total funds under management and administration advice just as markets have come down. And now, they've had a bit of a downtrend in their funds under management, but, looking at this actual quarterly, it's not too bad. And, with some growth in funds under administration advice, although they do also, they grow by acquiring. So it's not all organic, but I think, the 5-year graph tells you a little bit more of the story. But if you go and look at this company, which has been listed for a really long time, it's grown on the ASX in plain sight. It has, founder-led business. It has directors buying on market at the moment. It is going to probably struggle to get some good share price momentum while markets are iffy, and that's why I don't own it myself, but I just think it's a high quality small cap, and it doesn't, surprise me to see yet another good free cash flow result. We can see from that quarterly that they voluntarily put out that these guys are strongly cash flow positive. You could easily see, 10, 12 million free cash flow from this company as they are right now. And that puts it on a pretty reasonable multiple EV to free cash flow, like maybe 15 times. They pay a dividend. You've got to look for that growth long term to, get your outperformance there. But basically, this ticks all the boxes, the kind of small cap that I would be interested in. And it's a company I've owned in the past, but it's illiquidly traded. So when there is that downturn and there's more sellers than buyers, you can see quite a volatile share price. So anyone who wants to know more about this stock, look at the 10-year history and see how it has gone up and down with markets quite severely.
So would you hold it then if you had it?
Yeah, look, I call this a hold. I think this is actually a small cap, a long-term small cap. You could just hold throughout the cycle, and I believe you will do well. There's some succession risk as the founder maybe grows older. He's been there for a very long time. But having said that, I kind of, having watched this in public for 10 years now, my entire career, I've been following this stock. I've seen them do a solid job growing a business, growing earnings per share. That they are up a lot. They have paid dividends, and it is really a share price does follow earnings per share story if you look at the long term.
Interesting. You say you've been watching it for 10 years, so you still haven't got into it over that time.
I've owned it. Oh, right. I've owned it in that period for sure. Yeah, absolutely. Right. And let me tell you, that's why I mentioned it's going to be a volatile ride because it's stomach churning when seeing this thing trade. There's not many buyers, not many sellers. Today we've got $20,000 traded, and that's when a quarterly's out. So that gives you an idea of how it could go up and down. But I do admire, I admire the company, and over the long term, it has been a good one to trade because the long-term trajectory has been up. What we're seeing now is it's just come down off this massive all-time high it reached when markets were super hot, which is kind of what you'd expect for a fund manager. Yeah. So I don't see the current downtrend as meaning, this is a bad company. It's just obviously fund managers are a little bit cyclical with the market. Go and look at AEF. That's way more of a, super mountain. These guys have been relatively steady in comparison to some of those other fund managers for sure.
All right. So, Luke, your opinion?
Mostly agree, Andrew. It's one I've owned in the past as well. The fact I don't currently own it is not a criticism of the business because I completely agree with Claude. I think it's long-term proven to be one of the better small-cap stocks on the market. The long-term trajectory to me still looks really strong. I think this business just has a fantastic growth plan that they want to execute on. It's a financial planning business, and you look at the pillars that go around financial planning, such as the investment side of the business, and obviously the platforms like HubNet Wealth and some of the incumbents, the banks, Macquarie. Fiducian wants to replace those pillars around the financial planning network and keep that margin within the group rather than having it go out to external parties. So, they manage their own investment arm through a manage the manager function. They've built their own platform in-house, so they don't have to outsource to HubNet Wealth. And so it sets them apart from a few of their peers listed on the ASX that, run advisor groups, financial planning groups. They just achieve much better margins, much better growth, much better service for their own advisors and the customers that obviously come underneath them. I think Claude's spot on. This is a business that I see just growing that perfect sort of compound style business that you'll get over the next few years. Definitely hold it if you're there. It's a liquid. If you've worked hard to get a position, it's not one you want to give up easily. For the right investor who can take a long-term view and maybe go through a bit of that volatility Claude was talking about caused by liquidity or the market, I think you can buy it today. As Claude says, that sort of 14, 15 times earnings where it's at, that's a fair multiple for this business and the long-term growth. You may be able to get it cheaper. There's been times where Fiducian's probably traded on 10, 11 times earnings. But as it gets bigger and liquidity comes in, go back to what Claude said at the start of the show, that's where more funds can start to look at this business as it creeps up towards a 3, 4, 500 mil market cap. Liquidity naturally comes in and multiples naturally shift up. So it's probably at least a hold for me, Andrew, but a buy for the right investor who can stomach small cap volatility with a long-term focus.
Yep, good one. Okay, that is Fiducian. All right.